Hi, I am Maya, an AI-generated assistant of Probable channel. Welcome back to our weekly technical analysis video for the Nifty 50. Last week, we forecasted a potential move for the market. Let's recap what we discussed. Now, let's take a look at how the market moved this week. So, next week will the markets move in the uptrend? Or downtrend? Or perhaps go sideways? We will try to find out answer to these questions. Stay tuned for our in-depth technical analysis video.
Hello all, welcome to Nifty's weekly analysis video. Hope you liked the introduction part shared by Maya. So we have given her name as a Maya. Also, it was suggested by one of our subscriber, Mangesh. So thanks Mangesh for suggesting this name. So we really like this name and we selected this one. So there are other suggestions as well, but yeah, we have to go with one. So we decided to go with Maya. So we'll be creating some more AI girls and adding them as a introduction to many of our videos. So we'll use the names suggested in this comment of this last week's video. So thanks all for adding the comments. So let's move on further. We'll do the analysis with price action and indicators first, and then we'll check the Elliott wave, and at the end we'll check the option chain. So option chain we want to discontinue because there is not much details that we can give as the expiry is just starting. So and option chain is majorly useful near to the expiry. So let me know in the comments if I should continue or discontinue the option chain analysis in this weekly analysis video. So let's move further and discuss the price action and indicators. So first of all, in price action and indicators, in last week we discussed that Nifty will face rejection from this 13 EMA. Many of us say that moving averages don't work, but the real reason they don't work is not knowing the proper application. So here the application, you should know that it is facing resistance on this short-term moving averages. So any bounce that it will get towards this short-term moving averages, it may face a rejection. So here you need a confirmation. So here we got a doji candle, then it was, you could say, a clear downfall from the 13 EMA. So probably it will go more deep and then again pull back above 13 EMA and touch 48 EMA. So next is 48 EMA. So if it has to close about 13 EMA, it will next touch 48 EMA. Okay, so this is how we should be looking at it. So it will take a little bit time now, because if it drops below 16,800, it is likely to sustain below 13 EMA for at least a week. So here you can see there is a major support near 16,850. Okay, so there from there we bounced two times. So on this day also we bounced back. The trend is still bearish as long as Nifty stays below 13 EMA, and this major support, if gets broken, Nifty will have a hard time to recover. It will directly touch this 16,750 first, and then on the downside 16,700 is what we can expect. Here you can notice there is a gap. Let me zoom in. So this gap you can see here, the close price is at, check here, 16,641 is the close price. So if Nifty breaks below 16,700, then the next stop is 16,641. So these are the levels that we need to watch for. This is going to be broken as far as I can consider here, because 3 days continuously Nifty closing in red. This is not exactly 3 black crows. This continuous 3-day selling and rejection from 13 EMA gives us the idea that this support will not be spared. So yeah, let's see if it opens a gap down in next session and breaks this 16,800 support. RSI is below 50, considered bearish. If it goes below 30, it will have a rapid fall. Okay, so it might fall 300-400 points in a day if it goes below 30. So let's watch out for that. And here Aron indicator shows us the extreme readings, extreme negative readings. So we can still expect a negative trend to continue. course, couple of more days. So here you can see 200 EMA, Nifty is trading well below 200 EMA, 100 EMA, this white line, and this is 48 EMA. So we are going to get a death cross. So when 50 EMA crosses 200 EMA, it is called as death cross, and this is considered as a bearish signal. So let's move for the Elliott Wave analysis. So Elliott Wave analysis today will be a little special. So this is our positional view, right? Where is that chart? Yeah. So this is our positional view. We have been discussing since December 10th that Nifty is going to drop below 16,700. Okay, so this is 16,700. We are considering this as wave 1, and wave 2 currently is in progress, breaking below 16,700. That's what we expected. You can see here negative divergence as well. We discussed all these things in previous videos, so I'm not going to waste much more time here. There is more bearish case as well, which will consider a dip towards fourth wave's low or 0.32 Fibonacci. If you can see here in a last fall, Nifty did not touched 0.32 Fibonacci or did not go close to this. So there is a chance that it can go down as well. But for that, let's wait and watch 16,000 break. If that is broken, I'll put that chart, full bearish chart on the screen. Right now, I don't want to put that chart on the screen and scare people. But yeah, this is how it should move. So it should give a third wave rally, sharp rally on the upside. So for now, it looks bearish, and we don't know how much time it will take. Maybe 1 month, 2 month, because it is already slow. And yeah, so let's hope for the best. So this is the chart that we discussed. Then this is more detailed chart of the same. And here, this was another chart that we discussed. Here we mentioned that this could be a leading diagonal structure when it is going up like this. But right now it has went too much deep. Okay, so it's just 100 points away from breaking this low. So in a fifth wave, Nifty has to just make a very small high above 18,888, and then it should start the correction. Okay, so that will take again a long term, maybe 3-6 months it will take if this has to happen. But the chances of this are now reduced. So almost there is no probability now. Probably next week, once this 16,747 broken, we can delete this chart. So this was another chart that we drawn on 26th February. It's been a month and the view is still in line. So this complete 5-wave sequence is called as wave 1. Okay, this is called as wave 2, which is completed like this. And now we are in third wave. So this is the third wave that we are currently in, and its expected level is somewhere near 16,600. So it can be shorter than 100 as well, because wave 1 is already big one. Okay, so it can be shorter, and then even fifth wave can again be smaller wave, and then we can start the up move. So this is also a possible case, or in a worst case, this third wave will be very sharp. It will go below 15,600. So yeah, right now it's not looking that sharp. So don't worry. So probably it will just break 16,700 and then start the pullback as a fourth wave. So currently we are in this wave, and we are going to check the details of that wave. So this is how it moved, and yeah, let's check this chart. Okay, so this is what I was going to tell you, that this is very important video. And with this, if you are Elliott Wave analyst, or if you know Elliott waves, you can understand this chart very easily. So this is wave 1, which is a big wave, wave 1, then wave 2 as a zigzag, double zigzag correction. Okay, so usually wave 2 has zigzag or a double zigzag corrections, and again a smaller wave 1, 2. So this is a zigzag correction. Okay, and then third wave, which was a sharp wave as well, and then a fourth wave. So the fourth wave was expanding flat correction. So from 16,850 it came down, it made one more small low, 16,828, and then made high of 17,200 or 0.382 Fibonacci. We discussed this many times during the weekday videos as well. So this expanded flat. So here we are respecting alteration in the Elliott Wave Theory. So as you can see, 1, 2, 3, 4 completed here, and the fifth wave is pending. So the fifth wave's target we can draw by plotting Fibonacci on this 0, 1, and 2 points. So here we get numbers like 0.32 Fibonacci at 16,716 and 0.61 Fibonacci as 16,413. So most likely it will just touch 16,700, but the more optimistic target can also be 16,400. So let's see, we have this wedge-like structure formed here. So this is a wedge structure, right? Impulse wedge structure. And here it should take the support near this downward trend line and give a consolidation move, probably which will last at least 2 weeks it should last, and then we can have a fifth wave. So the fourth wave will start next week uh, if our wave count is right, and then it will go just 0.32 Fibonacci. So we don't know the end yet, but when it completes here, okay, maybe it forms some a doji like structure or a hammer like structure, and then from this point to this point we have to plot Fibonacci. If we see 0.32 Fibonacci, from there it should start the rejection just like this one, okay, and then we'll have a fifth wave going on the downside. So the max expected level that we explained earlier is somewhere near 16,400, right? So that is the major support. So 16,400, yeah. So this is the major support. So hence we mentioned that Nifty could come towards this 16,400 like this, okay, and then bounce back. So this was our earlier target. So it can even go a little lower towards 16,000. Don't worry about that. So if 16,000 comes, or if it breaks that by a good margin, we have to prepare for worst case. So for now, hope you understand how the moves are declared here. And this is the third wave's final wave, fifth wave, okay, and we should be completing that fifth wave in a next week. Then we'll have a consolidation fourth week wave. So yeah, then a couple of cases on lower time frame. So this is 1 hour chart now, and we are going to discuss this move, okay. So the fifth waves, this move we are going to discuss now. So again here you can see clearly that we have labeled with 1 2, right, 1 2 pattern. So the third or fifth wave will be in progress, and it should breach 16,828. Next session itself it should breach, because this is the third wave, which is the strongest wave, and it's a quick wave. So if it opens small gap down also, then assume that it's not a big deal to break down by 100 points, okay. Nifty closed at 16,932 or 945 something, okay. So 100 points drop is pending. If it opens gap down, it will easily break it. If it opens flat, we just have to watch for close above 17,000. It should not cross 17,000. If it opens flat, then it should start the dip as well. First 15-minute candle is important. So this is how the move should be happening. One low, then a small pullback, and then another low, okay, breaking 16,747. So Monday or Tuesday we should breach both 16,800 and 16,747 low. Then we'll have a consolidation wave as a fourth wave. It might spend time in this, and then we'll have a fifth wave, which is a final wave. So this is how the internal moves are expected of a fifth wave, okay. Alternative case, okay. So as you can see here, when you plot Fibonacci on these 2 points, here you see points from Fibonacci as 16,937. This has been breached, but there is a possibility that this could turn out to be a complex correction W, X, and Y, okay. Here the move does not look completely impulse, but we have to be careful here. So if Nifty opens gap up and let's say it breaks above 17,096, it needs to open a gap up and break this level, then there is a chance that we will move higher and we will go towards 0.600 Fibonacci. So for this to happen, Nifty will need a lot of big push, and it will completely break our bearish pattern. It will make some kind of leading diagonal pattern that at the best, but it will completely break the bearish pattern. And looking at the fall from the 17,200, it doesn't feel like it will open gap up and break 17,100 now, okay. So once this is broken, we have to consider that the fall will be completely halted and we have to look for something else, some different pattern. We have to look for it. So we'll update that in a weekly analysis video. So this is a complex correction in a B wave. Okay, that's what we can assume. It needs to open gap up, break 17,100, then only we should be turning bullish for next levels 17,400. Okay, so this is how the Elliott wave moves are looking like. And next we can go for option chain data. So on option chain, we see here 17,000 as a major support, which is about to be broken. Okay, on put side, the highest open interest present at 17,000. So this looks to be breaking now. Only 11% extra OI got added on Friday session. OI change. Okay, 11% people freshly shorted 17,000 put. Here you can see on call side, we have 79 or 80 lakh put open call open interest, and it got jumped by almost 200%. So fresh call shorted. So the resistance is shifting lower. What is what you can say. Here the biggest number is 17,100, but yeah, this is going to shift lower and this should become the resistance. 17,000 should become the resistance now. In Monday's first 15 to 30 minutes itself, this number will significantly increase because 17,100 people will shift lower to get more premium. Okay, so here we have seen that there is a jump in call open interest. Okay, so call open interest whenever jumps, there is a significant resistance. So 17,000 is a major resistance, and here also 17,000 major support. So right now it's at equilibrium, but here the sellers are more, so we can expect the put writers to shift lower, and that will cause the downward move in the Nifty. Okay, so this is how the short covering can happen. Put short covering can happen. So that will trigger the downside. And on downside, what is the support level? So the second major support is at 16,800. Okay, though this is by big by smaller margin, we have one more very close support at 16,800. You can see that on a price chart as well, right? So similar thing is shown by option chain, and here we see a same support 16,800, and then next we have 16,500. So just remember, breach of one support will take it to the next support. So once 16,800 is broken decisively, it can fall 300 points down. So that possibility will be open, but let's see if that happens in this expiry or it doesn't happen. And yeah, the resistances will shift lower. So this will become major resistance and it will shift lower once we see a bigger drop below 16,800. So this is all on the option chain. We saw a fresh shorting happening here. You can see here, right? So ignore this number. This has jumped 700%, but there were no call writers here earlier. On Friday, they shorted separately on 16,900. There was no OI present here. So that's why you see a big number here. Okay, so this jumped 200% means it got it was already higher, and that increased by 2x. That's what it says here. Okay, so yeah, but significantly there was a call open interest change, and put open interest did not change much. You can see here upper strikes. You see the put shorters exited their positions, and there was a no significant additional put open interest built up on these sides. You can see here. Yeah, these are the two strikes where we see some put open interest addition, but yeah, the people are shifting from higher strikes of put to lower sides. So that indicates a bearishness in the market. So that's all on the Nifty's Elliott wave analysis, option chain analysis, and price action analysis. I'll add the summary here, and will tell you like that summary will give you what we discussed so far in this video. Hope you enjoyed the analysis. Do let me know in the comments if there are any doubts. I'll be happy to solve. And make sure you subscribe and like, because it takes a lot of effort to create these videos. Thanks again for watching. Have a great Sunday. Thanks. Bye-bye.